Novo Nordisk shares are down over 20% year to date in 2025, and investors have been asking me if I thought the stock was a buy on the dip. Now, I've already answered that question in previous videos. I rated Novo Nordisk stock as a buy and updated that recommendation on May 16th, rating the stock as a buy. But in this video, I'm going to go a little bit deeper and I'm going to provide my price prediction for where I think Novo Nordisk stock ends up in 2025. So by the end of December, where do I think the share price will be? How much higher do I think it will go? Obviously, I think it will go higher. That's why I have the stock rated as a buy. But how much higher do I think it'll go? That's what I'll answer in this video. If you've been watching my videos regularly, you'll know that I use Finchat.io regularly on a daily basis. They're a stock research platform that has information on all stocks globally. They're the only platform that has information on company-specific metrics, segment-specific metrics like AWS cloud revenue. Finchat.io will give you 2 weeks free and a 15% discount if you use my description in the link below. All right, to make this stock price prediction, I'm going to use several estimates and assumptions, and I'm going to share with you where I'm getting those estimates and assumptions from so that you can follow along and you can check my numbers. First of all, I need the fiscal year 2026 earnings per share estimate for Novo Nordisk, and I'm getting that number from finchat.io, and I'm getting a lot of my numbers from finchat.io. So if you want a link to this website and its data, you can use my affiliate link and you'll get a discount for using that link. Now, they estimate, the Wall Street analysts that are following the company estimate that it will deliver earnings per share of 31.5, but this is in Danish krona. And so I'm going to convert this into US dollars at an exchange rate of 0.1529. And that's how we'll utilize the earnings per share estimate, converting it from DKK into USD. Now, I also need the forward price to earnings ratio, which for Novo right now is trading at a forward PE of 17, near the lowest it's been, going all the way back to 2016. So right now these shares are trading at near the cheapest valuation they've traded for in the last decade, and that can partly explain why I think this stock is a buy on this dip. All right, so now that we have the estimates, let's go ahead and look at a few scenarios of where the share price could end. So when I take that 31.5 earnings per share estimate and I multiply it by the currency exchange rate of 0.1529, I get a 2026 earnings per share in dollar terms of $4.82. Now, when I multiply that by the current forward price to earnings ratio of 17, I get a stock price of $81.88. So if everything goes as planned, if everything goes as expected, the share price could rise to $82 by the end of the year. But if the forward PE recovers and returns to its average levels, the stock price could rise even more to $91 at a forward PE of 19 to $101 at a forward PE of 21. In the downside scenario, if the forward PE were to decline to 13, the share price could decline to $62.61. And I don't think a scenario of its forward PE declining much further from this point to be very likely, although it is a non-zero probability. So I like to account for that in my scenario analysis of company stock prices and where they could end up by the end of a year. So all else being equal, I expect the company's forward price to earnings to either remain where it is today or recover to higher levels. I'm not expecting it to recover to much higher levels because the healthcare industry is under broader pressure, right? The US Congress and Senate right now are working on a tax cut and tax spending bill that incorporates huge cuts to healthcare spending in that tax cut and spending cut plan. And so that's going to pressure companies like Novo Nordisk. It's going to pressure the entire healthcare industry. And so that's a headwind that could face the company. Now, those estimates are likely for the cuts to come later, several years later. The Congress and Senate is trying to delay those cuts in healthcare spending. But you can see the sentiment coming out of the US administration is that they would like to cut healthcare spending because it's growing out of control. It's a large expense in the United States, and the quality of care is not that much better than in other parts of the world, yet it's much more expensive. So I can understand the US government taking aim at this category, trying to drive efficiency, trying to drive improvement. All that being said, where do I think the share price ends 2025? I think Novo Nordisk stock ends up somewhere between $80 a share and $90 a share to end this year. So somewhere between a forward PE of 17 and 19 is where I think the stock price ends. And you can see it has a nice bit of upside here from $68 a share up to the midpoint of my prediction here at $85 a share. So you can see from my recommendation, I've had Novo Nordisk stock rated as a buy, and I updated that recommendation on May 16th. This came after the company's CEO was forced out, and I did a video about the company evaluating the expected future free cash flow, weighing it against its weighted average cost of capital, and looking at my proprietary discounted cash flow valuation model and coming up with the conclusion on whether I think this stock is a buy, hold, or sell. So I talked about my proprietary discounted cash flow valuation model for Novo Nordisk stock. The output of this calculation has the shares worth $150 right now today. And we already talked about the current market price. So the difference between my intrinsic value per share calculation and my end of 2025 calculation is the 2025 calculation is where I think the price will be by the end of this year. So this is where I think the price will end. I think the price will drift higher towards this number by the end of this year. But this price is what I think the shares are actually worth today. It's just that I don't think the market will reflect this valuation this quickly. I don't think it'll incorporate it all this year. It might take longer. And so I'm forecasting that the price improvement will approach this intrinsic value per share calculation. But I think it'll take longer to reach this level, even though I think this is what the business is worth today, because the market doesn't always agree with what I calculate as a business to be worth. But typically, in a lot of cases, I've seen the market come to my calculation on intrinsic value per share more often than not. If you've been watching my videos, you can make your own assessment of the market realizing the intrinsic value calculations I'm calculating for businesses. But regardless, this is for my own purposes, right? This is what I think the shares are worth. And so I'm willing to pay a price compared to what I think the intrinsic value per share is worth. And the great thing about owning businesses, you never have to sell a share of stock to make money on an investment. The company can generate strong revenue growth and strong profit growth and eventually pay dividends, and those dividend payments can increase over time, and you can make plenty of money as an investor just buying and holding a stock for the very long term. Even though the price might not improve, the company can continue paying you dividends for a very long amount of time, and you end up making a good return on your investment despite the fact that the market price never reflects your intrinsic value per share calculation. I quickly wanted to let everyone know about this great offer for my channel members at the investor tier. You can gain access to my spreadsheet containing my ratings on over 130 stocks. I update this spreadsheet with multiple times and multiple changes per day, Monday through Friday. Additionally, channel members at the investor tier can get access to my spreadsheet with my discounted cash flow valuations, and I update this spreadsheet multiple times per week with multiple new companies added to this spreadsheet with discounted cash flow valuations. There's already dozens on the spreadsheet available now. You can get all this plus early access videos, plus member exclusive videos, plus priority response to comments, all for less than $15 per month. So what are you waiting for? Hit that join button below and start experiencing the benefits.